Well, hello everybody. Welcome back for those of you that are back, and for those of you that haven't come around here before, thanks again for showing up. Appreciate it. Wanted to talk about AVGR. What an awesome beginning of the week that I had. Just under $170,000, $175,000 profit on AVGR. I was holding it from 34.5 cents and sold the bulk of it in the high 90s, but I started selling at about 92 cents. I think that was when the market opened. I completely sold one of my two accounts pre-market at 96 cents. I think that was about just under 45,000 shares, and then everything else in my other account was taken out during regular market hours, anywhere between 92 to 99. And for those of you that have been paying attention to my posts with everything, I was very confident that we were going to see a turnaround once it completed this AB equals CD move. And I'm going to show you here real quickly. I'm going to go back to my other video and I'll show you exactly how I drew this. But this is the AB move right here, and this is the CD move. So the AB is equal to the CD. D point would be point completion, and that would be your sell right there. I was confident that something was going to happen right there in terms of a turnaround, just given number one, the fact that that's D point of your AB equals CD move. And also, I'm going to go over a couple things. I didn't do a video on this because I saw this after the fact as I was messing around, and it just further strengthened my position that I needed to sell at that point. And that was when I started looking at some Fibonacci retracements. What I'm going to do is I'm going to click on my Fibonacci retracement, and I'm going to go from the very high right here, if you can see it, very high, down to my low point right there, which is at those swing lows right there, lowest point, and that's about 18 cents a share. Okay, so just by drawing that one right there, I get really close to my 382 Fibonacci retracement. Okay, remember that my Fibonacci 382 and my 618 is also known as the golden mean. I have those highlighted as yellow, each of them. Those are my main Fibonacci numbers. The 618 carrying a little bit even more weight than the 382. So you can see that full leg right here, this full downward move right here, that Fibonacci retracement comes in at about 382, right where I was anticipating a turnaround right there. All that means is about 38.2% of this 100% of this move. That's the retracement, 38.2% coming back up here, okay? More often than not, you'll see retracements like that. So when I look left right here, structure gives me some really good clues as to what it is that I'm looking at right here. Okay, I'm coming up from this retracement at the 382, coming up on structure right here, coming up on structure right here. Further left, I'm looking at structure right here as well. So my question is, as I come down, this is a bearish move. We can agree with that, but we know that as price action makes these moves, okay, as it breaks a new structure low right here, it retraced upward. Where did it retrace to? Well, I look over to my left, look at the structure. It pulled back right up into structure until it did what? Pulled down into here, and then it even continued further to make a new structure low. And now what have we done? We've pulled back in. Look left. I got structure here, and then structure over here, like I just mentioned. So how do I know with certainty that this retracement that we just had right here up into the 382, how do I know that this just isn't a retracement back up into structure before this happens? Do I know that? Is there anything that is high probability that is telling me that? The answer is no. I don't have any kind of confident ability to state something like that would be true. You get all this out of the way. So that's just with one Fibonacci measurement right here. Now, what I can do is I can label multiple Fibonacci retracements on top of each other and to see if I get grouping or clustering or confluence. They are all the same. So I can start with another retracement right here. And what I found right here, from this high down to this low, look what happens with my two fibs right here. Now I'm looking at a 618 retracement of this leg right here. Okay, so let's recap. I've got a 382 retracement from this first big leg. I've got a 618 retracement of this other leg right here. My two main Fibonacci numbers coming right and around that D point completion right here on that second green line. Okay, again, I'm building a case for myself with reasonable technical analysis as to why I should or should not stay in a trade. And right here, I mean, this clustering, it's happening in that 104, 109, just above that $1 mark. I'm seeing a lot of clustering, and there's some stuff right there that's telling me that I might want to look to get out of this trade relatively soon. The other thing that I did, and this is pretty cool right here, is I drew a Fibonacci extension from this AB equals CD pattern. Okay, swing low to swing high, back on in, and wouldn't you know, right around that level right there, again, I get a layering or confluence or grouping of that 1618, my main Fibonacci extension, coming right in around there. Okay, so I put up a post with a picture that said somewhere in this box from right here to here, and I even drew it all the way back, something like this, because I wanted to highlight in that post, because I can't talk in a post. I wanted to highlight it capturing these three main Fibonacci numbers right here. And what I meant within that post of three separate measurements, I took those measurements from separate levels. So these measurements right here are completely independent from one another, and then they're computed mathematically. In addition to these measured moves right here, I get a lot of action coming in this green box right here that's going to tell me that there's going to be a turnaround right here. And wouldn't you know it, comes right into that top number, 618. I think the high was what, about $1.10. And the next day, I'm looking at a daily chart right here. And the next day we had, if you can see it right there, we had a doji candle right here. Okay, that typically indicates a change in direction coming up. It also represents indecision. Okay, and then we get this next candle right here that happened today. And boy, I'm glad I wasn't in at that point in time, because that low, that raid that happened, took it down to about 78 cents. And it proceeded to get bought up real quickly. So a couple things with this. If I look at it on a 4-hour chart, and I start looking at structure again, what I don't like seeing right here is this big red candle right here that completely takes out that highest close candle right here, okay? And it also closed below my two other candles right here. Closed below, broke below, closed below, and then what did the other 4-hour candle do towards the end of the day? It came back up and retraced. Well, where did it retrace to? Retraced right here back to my low. So are we in a process of getting ready for another move downward? I don't know. I really don't know the answer to that. Are we looking at the potential? I would say it's a possibility is what I'm getting at, but I don't know definitively what the answer is. You can clear some of this out so it doesn't get confusing. For the people that are really in love with this thing and they want to keep this train rolling, I would tend to look at it this way. If I draw a retracement now from this low to this high, yeah, I was going to say about 50%, and that's what it is, about 50% retracement. If we get a run back up to here, this is going to be now my excuse me, my main resistance. And if we get a break above, close above right here to where the market signals higher, okay, that's at that point in time, you've got to be bullish on it. And at that point in time, I would actually look for a retracement, excuse me, a retracement where back into structure before looking for continuation upwards. Okay, it would just be a basic trend continuation following that I've done in other videos. That's what I would look for. It's a possibility. Again, there are no certainties here. I don't know what the market's going to do. I just know how to interpret the probability of certain things. And the probability of that happening, I would say, I don't know. You know what? Give it 50-50. It's just a possibility of something that it could do. Could it drop off more? It absolutely could. Not outside the realm of possibilities to see it get down to this level right here, which right here was going to be previous resistance, which would now turn into support if, in fact, it does get down to that level. And not surprisingly, you're looking at about a 618 retracement. And that's, as I mentioned, the golden mean. So that is a possibility as well. I would say that that's about where I am with AVGR. Again, had to take profits on that, $175,000 worth of profit. I'm happy to be out of this trade. I think that there's There's time that needs to be had with this for the market to indicate what its direction is with it. There's no denying you're looking at a bearish or a bullish pattern right here, or a bullish trend. I mean, it's very bullish. I just don't know what's going to happen with it, and I think there are better plays out there for me personally that would that show better. You know what I want to do real quickly? I want to go back to that Amarin one. Look at Amarin right here. In fact, I already got it drawn in. This was an AB equals CD pattern. This was a 382 retracement that I talked about in the previous AVGR video. Okay, there's my 382. D pattern completed right at 23. It was a beautiful place to sell at 23 because why? That's an all-time high for it. And D point completion, there's no guarantee it's going to break above and close above that 23 level. So I sold right there, pocketed about, I think it was about $3,500 worth of gains. And right after that D point completion, look what it's happened since. What's the percentage loss on that? If you held on, I sold it about, actually right about there. I would be down at its lowest point about 19%. I'd be down currently maybe about 16%. 16% down, and if it recovers back up to that level, then you're looking at another 16%. So you'd actually be making about 32% when you actually look at it that way. That's another AB equals CD pattern after D where it dropped off. These things just tend to just act the same way. You just have to recognize it. That is AVGR. I don't think there's anything more that I want to mention with that. I would just say that with AVGR, I think the possibility of a sell on the news is a very strong possibility. I think it goes back to Dow theory that the market prices in all known information. I think it's well known at this point that AVGR is looking at a positive FDA decision, and I wouldn't be surprised if it turns into a sell on the news, and then everybody's like, why is it selling? It's great news. I don't understand why. I'm buying on the dip. It's because it's priced in, and that's just how Dow theory works and typically how markets work when they price something in. So be cognizant of that. If you're getting nervous holding this, that would tell me that your position sizing is probably too big, and you'd have to adjust accordingly with that. Let's go over to AGRX. Sorry. Pool man's here again for the 15th time. Let's see, AGRX. What I'm looking at with this one is a trend continuation pattern or a consolidation pattern. It's basically what it is. What's an easier way to, yeah, this is probably the easiest way to draw it. So I'm looking at what is called a pennant, and I'm going to draw it this way. Basically something like that. You can kind of see the pennant formation, and on all the way down, that's the staff right there. So this is typically a consolidation from a previous run, and the breakout tends to be in the same direction as the previous run. So that's what we're looking at with that. I took a lot of shares at 160. I think I'm in about it's about a $90,000 position, I believe. And the reason why I feel so confident with that is, again, these things tend to break to the upside. They have some good upcoming catalysts, so that's the slight fundamental aspect that I like to apply. If I know they have an upcoming catalyst, I like hearing about that, but it's a very small portion about what I'm looking at here. And the reason being is that if things are moving in trend and bio, typically the catalyst is already behind it, so it's kind of a moot point at that time for me. But knowing that that's upcoming just further reinforces my decision that I think we're headed in the right direction with this. Now, in terms of stops, I did readjust my stop, and I'll show you why. I initially posted that I'm going to do a stop at about 152. It's going to be below that low right there. And the reason why I adjusted it is because of this right here. I'm going to be pretty generous with it. And at 160, and I put a stop, I think about 144 is where I'm looking at. It's about a 10% risk. And as far as gains go, I would be looking at, it continues this pattern right here. I would be looking at lowest low, highest high, back on in, about right there. I would be looking at, in fact, if I were to do my D point completion right here as well, about right there, look at that. So I would be looking at about 212. I'm going to front load it. That's what I wanted to tell about AVGR is I actually front loaded that order heavily on the day. I just want to make sure that I got filled. So I don't like running it all the way up to that level right there at 212. I could make sure that just in case it falls to or comes up to 210 or 211, whatever the case may be, I want to make sure that I get filled. And so I'm going to front load it a little bit, probably about like say 209, just to make sure that I get filled on that order. And let's see here. So that's what I'm looking at with this one. I'm looking for it's called a pennant pattern. Typically these are bullish. Typically that breakout will be in the same direction as the previous run, and that's what we're at. We're just consolidating right here after that first run, taking a breather, and we're expecting this to go north. Not a whole lot to do with that. I got out of RARX today, and here's another pattern that's pretty basic but pretty easy to see. This is called an ascending wedge, and typically these will break to the downside. So I got in back here. I was hoping for it to break to a new high right here and keep going. Then all of a sudden it made a lower high right here, and it's making a lower high right here, and I saw the ascending wedge, and I thought, you know what, I just don't like how this is looking, and I went ahead and I got out right near the market open, and I think I pocketed $835 on the trade. It's about 4% of the position that I had. I had a smaller position in this, and I'm thankful that I did, because here's a great example as to how the ascending wedge will typically break. It breaks in the opposite direction as the pennant or bullish flag that I showed you. That's just exactly it right there, and that's just textbook. So I felt good about making that decision. There's some other purchases that I made today that I got to post as far as alerts go. SYN, this is more of a trend continuation pattern, but I did take it a little aggressively. Same type of play with the pennant like that. Now I was trying to buy as close as I could down to at about that 7160 level. You can see it found support there, found support there, found support, found support. So I felt pretty comfortable with that. So I took a position with that. Again, looking for a break to the upside from this original run right here. Okay. So where do my stops go? Stops immediately before I even place this trade have to go below my lows right there. Going to be roughly about right there, because if they break past those lows, then I'm looking at possibly a retest of right in here at maybe 67.74s all the way down to 63.01. So if it breaks that level right there, that lower end of the pennant right there, I definitely don't want to be in that trade. That is SYN. OMED, same deal right here. Same type of pattern. It's crazy how it all is the same, isn't it? These are all doing the same things. There's your pennant. Looking for a break to the upside, and profit targets are going to be, with this one, I might take off half at about 10% and then let the other half run. But you know what? It already broke to the top, to the upside right here. So on the 4-hour chart. So I might actually hold that all the way to, and you start seeing that I get the confluence right there with my AB equals CD pattern, with my 1414 extension right there that I drew in, comes in right at around that 115, 116 level. So I might ride the whole position up that far. That would be a real nice trade. NDRA is another one that I took right near the end of the bell, and I am looking for this one. This is a 382 retracement right here, right there, and we're looking like we're going to break, but it's a more aggressive trade. It's a more aggressive trade, but I'm taking it right there under the impression that we're going to complete this AB equals CD pattern right here as well, and I'm looking at selling that at around 334 or so, and my stop is definitely going to go right here at about 261, just below these lows right here. Again, I've got a low right here, I've got a low right here, giving them a little bit of room to swing if they do. And so anyways, right at that level, right at that level, about 261 is where I'm going to have a stop. Again, it's all based off of structure, all based off of decisions that people have made before in the past. I think that's about it. So I have a little bit of homework to do as far as putting out some alerts. Sorry I can't do it at the moment that I make the trade. I've just got so much going on. Sometimes it's just not feasible for me to do that. But like keeping everybody in the loop, and people are getting stuff out of this, I appreciate it. I'm glad that you do. And you know, like I said before, I don't have a crystal ball as to exactly what's going to happen, but I can read a price chart and interpret what it's showing and be able to explain the high probability of what is most likely to happen. That being said, nobody knows what's going to happen. Nobody knows if AVGR is going to run to $4 or $5 or something like that. It's not showing anything like that. And you can only go off of what the chart is showing you at that moment in time. That has proven to be the most reliable of any kind of trading that people can do. It's just you're going off the great equalizer, the chart, everybody's move, whether you're a hedge fund or whether you're just a typical trader every day, it's going to all be represented on the charts. Everybody's move is represented here. So that's why I like it so much. It filters out all the other stuff that you don't have to listen to. I can turn on CNBC and I can have 5 different people telling me about 5 different reasons as to why the market is up or down on any given day. And are they right? I don't know. Are they wrong? I don't know. But it doesn't really matter to me because I know what the chart is showing me and I know what the most high probability move next is going to be. So anyways, thanks for listening and I will talk to you guys soon.